All right, we're getting right to it today. I had some follow-up thoughts about the Fed yesterday and everything that he did and said and how it impacted the markets, and I wanted to break that down for you guys today. I'm going to talk to you again about the S&P 500, the SPX. I'm going to review an important stock investment that I've got that has given me a very bullish signal in the charts, and I want to bring it to you guys' attention and tell you exactly how I'm playing it. And I gave the Discord a hot penny stock. That's for the paper chasers. It's not for the investors. And I'm going to share that with you guys today. If you don't know what the Discord is, it is the Stock Squad Patreon. Myself, StockMo, Keenan Grace, and Stock Up with Larry Jones, giving trade alerts, technicals, and answering questions. I'm going to leave a link for that in the top pinned comment so you can go check it out for yourself. So the Fed. We know the Fed gave us no rate cut. The market wasn't expecting a rate cut. He affirmed 3 cuts in 2024, which was a little bit of a surprise because, as I've said, it did appear that inflation is no longer going down at the same rate that it had. And if anything, it's slightly curling up, and the market loved it. They loved the dovishness of the Fed. He didn't really give us any strong hawkish rhetoric, but he did do something that a lot of people hadn't talked about yesterday, and that's that he reduced the number of expected cuts in 2025 and 2026, and I don't think that everybody's processed the significance of that, so let me just explain it. He's seeing the fact that inflation is going to remain a problem, and he is not going to be going on the rate cutting campaign that a lot of people are expecting, and this is going to continue to add pressure to the overall stock market. And so on the other side of the coin of the bullishness that we are experiencing right now, the long-term view is a little bit more bearish. But the markets loved it, and I want to comment as to the sweet spot that we're in here in 2024. And the fact is that when inflation goes down, it's good for the economy, and so stocks rally on the news of inflation going down. But here's where it's weird. When inflation goes up, it's actually good for big tech companies, which make up the majority of the S&P 500. So yet again, stocks go up. And so whether inflation goes up or down right now, the market has tended to rally. And this is not a normal situation. And the only point I'm going to make to you guys is that this will come to an end. One of the factors that could cause it to come to an end would be bigger data outside of inflation. The fact that the economy has actually gotten a confirmation of weakness that we've really not gotten. When the inflation is strong, it means the economy is strong. So other data that we just haven't gotten. We haven't gotten a strong enough read. Inflation hasn't moved strong enough, or nothing really has come out to push the markets outside of its bullish mind frame. So no matter what happens right now with inflation, this market wants to continue to rise. And I recently said that before the Fed's talk, I said that I think that we're going to hit 5,500 on the S&P 500 as measured by the SPX, but I wanted to clarify something I shared with you guys, that we need to expect a 4 to 6% correction, and I think that we're going to trend up right now to around 5,300, and I think that at that point we might get that 4 to 6% correction, bringing us back to around 5,200, but we're going to continue in a tight pattern pushing up to 5,500. And based on what I just described, that's enough time frame for all of that to happen, for us to spend about 4 to 5 months, putting us into the latter summer, where I think that the market's going to become way more volatile, which is going to be defined by choppy price action and a little bit more difficult for people to trade. We're in right now an easy trade environment, as I described, that it didn't matter what data was coming out from the economy. The markets wanted to climb. That will come to an end. It hasn't come to an end yet. Everyone always asks me, well, is it time to buy the SQQQ? I'm going to tell you no, because we do not have a clearly defined falling market. In my mind, we have a clearly defined climbing market, and so be aware of that. Got a couple important plays for you guys. One is a long-term investment for a turnaround company opportunity, a stock that's down 86% that I'm going to show you the charts, why I like it, and why I think it, for me, is an ideal long-term play and what I'm hoping to get out of it. And I've got that penny stock play for the paper chasers for you guys today. So let's just dive right into it. The company I'm talking about is VFC. These guys, they've got an interesting story. I've talked about it in the past, that it's been in accumulation. What's accumulation for me? What does that mean? Accumulation means for me that I'm not going to drop tens of thousands of dollars and buy 1,000 shares today. Can I do that? Do I have that money? Yes. But what I don't know is how low the stock's going to go. And so I set it to a daily buy in an attempt to catch the bottoming price movement. So who knows how low it's going to go exactly, but I believe that we're on the bottom half of the buy zone for a future higher price. And that's what VFC has been for me. These guys own iconic American brands like Vans, North Face, Timberland, and Dickies. And you might ask, well, Josh, why in the world is a company that owns popular brands like you just named dropped 86%? Well, the problem is that they went out on a buying spree and bought a bunch of companies and a bunch of brands, and they mismanaged their debt, okay? You say, how did they mismanage their debt? Well, you go out and you buy a company with the expectation that you're gonna run it better than the people who had previously owned it, and then you're gonna find additional revenue by cutting costs that are gonna feed the system and ultimately pay off the debt quickly, but that didn't happen. You know, when you got into 2020, things began to change. 2021, 2022, 2023, people stopped going into retail stores. Some stores began to have some trouble, and they weren't able to realize the revenue that they had hoped. And then these companies became a huge debt burden, and that became a problem, and it's now had to get priced in. The old CEO left. That's not a good sign. New CEO has come on board, but sounds pretty bad at the moment as the way I'm depicting it, but here's my logic. There's a number of things. I'm gonna go through them one by one. One, these are great American brands that are not going to go away, and so they're going to find proper management and they're going to succeed. Two, these guys used to be the gold standard of dividend paying. They used to be a gold standard dividend payer, and I think that they're going to return back to that in time once they go through this reorganization phase. I've seen this many times before, companies that have had a long-standing trending line moving up, going through a reorganization phase, but they then get to a place where Wall Street says, okay, we're going to invest in these. These brands aren't going away. They're going to end up becoming a future dividend payer. So we're going to begin to slowly accumulate. They're doing the exact same thing that I'm doing. And I'm going to show you in the charts why right now is an important moment. And before I even get into that, let me just explain to you that the price has come down. I've been accumulating since $20 lightly, very lightly. We're talking just like $5 a day type accumulation. And as we've gotten down to the $14, $15 range, I increased it. And as we've gotten lower, it's time to take some lump sum buys. We're at a critical line of support at $14. And I wanted to go over and remind you guys what support means in the concept of trading or investing. Support does not mean that the price will come down, hit that price, and bounce. Sometimes that happens, but that's not what support means. Oftentimes, supports represent levels, right, in which the buyers will begin to react to that level. So price actions can sometimes go right beneath a support level, but when you're looking at the daily time frame, you'll see that it gets bought back up to that support level. And so we could come below $14 and we could have a flash moment down to $12.50. That's where I find super strong support. And it then would close back above 14, which would be a confirmation of it respecting the $14 price range on the course of a open market day. Now, here's the bullish thing. I'm going to show you two things in the chart that I think you guys are going to appreciate. All right, the most important thing I want you guys to see in the charts today is this bullish divergence on the RSI. Bullish divergence is when momentum is going up, it's not going down, but price continues to go down. When you see this, it's a signal that the price move is going to come to an end and it's going to begin to go back up. And you see the same thing back here where price was going down, but bullish divergence was actually going up, and it gave us this move back up to its all-time high. And so overall, bullish divergence on the weekly chart, which is the longer time frame chart, is very bullish to me, and it's really making this stock seem very appealing at this price point. But there's another thing, and this is for people who want to take their time and only buy signals. They don't want a DCA, they only want a lump sum. I'm going to give you guys another important signal, and that's the 20 EMA. So you can see that the 20 EMA, that this stock for a long time, all the way largely since 2021 has been moving below the 20 EMA, right? It gets rejected, 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 almost broke through and rejected, right? And so if you're wanting a very strong bullish buy signal and you want to wait and you don't want to try to accumulate between 14 and 12, which might be the very bottom, you simply want to wait for it to close on the weekly time frame above the 20 EMA, which looks to me at around $16.50. So that trade is really looking interesting to me, and I didn't want you guys to miss it. And some of you might say, well, Josh, you've mentioned it over the last 6 months a couple times. I mentioned to you that this was a long play, a long accumulation, but today is the day to get a little bit more excited about VFC because the charts are absolutely showing me that there's something coming much sooner than later right now on VFC. All right, now I'm going to give you guys a penny stock play. If you're not looking for that long-term investment and you're looking to take risk, I'm going to give it to you guys today. I'm going to give you what you want here in just a minute. Let me do a quick shout out for the investment app, the MOOMOO investment platform. If you need better trade tools with more technicals, it's got one of the best charting tools that I've seen for a mobile phone. It'll let you do a lot of things that you can't do on Robinhood and some other apps. Check out the MOOMOO investment app. But right now, they've got one of their very best offers they've ever come up with, which is they'll give you 8.1% interest on your money sitting in the account. So you can use it like a glorified savings account and wait, for example, VFC to potentially come down to 1250. Possibly consider taking a risk there if it makes sense to you. It's not a suggestion for you to buy, sell, or hold, but you can earn that 8.1% interest, do nothing, just leaving your cash sitting in the account. Plus, they'll give you up to 15 free stock for investing in their platform. They're definitely trying to grow their customer base with these aggressive offers. I've used MOOMOO for a number of years and really like the app, so check it out for yourself. All right, let's talk about this penny stock and why I like it. I'm going to show you guys in the chart. I don't normally get into these high risk plays, but I was using a stock screener, and based on the parameter that I chose, this one popped up. A bunch of them popped up. I went and looked at the technicals on all of them, didn't like them. I looked at about 6 or 7 stocks today. I liked the technicals on this one. Let me show you why, and we'll go from there. All right, the name of the company is KZR. These guys are a life science company that's a high risk industry. But let's go back over the RSI because that's where I saw some bullish divergence. So guys, look at this. The RSI is practically pointing straight up while the price action has been going down and or sideways. And so that's the first thing that told me this thing is getting ready to pop. The other thing that I really like about it is that we have very little resistance above where we're at because it's moved sideways for such a long amount of time. And you want to look for plays. So after this drop here, we have a pretty long period of going sideways. We had a pretty long period of going sideways here, which led to this move up. And so I just think that it's time for this to move up again. And where is it going to go? Largely, there's this area of structural resistance at 220. There's this area of structural resistance at around $1.20. And then there's a much higher area of structural resistance at 438. So at this point in time, my opportunity that I'm largely seeing is a move from, it was 80 cents to $1.20. And I gave this alert, and it wouldn't shock me if the community pumped this up from 88 cents to 93 cents. I gave this alert in the Discord earlier today, and it wouldn't shock me if that little alert has put some upward pressure on this. But I think that we can get this to $1.20, and I think that it wouldn't even shock me if we got up to $1.50 to $2. I'm going to tell you guys, though, that you need to be using a stop loss. My stop loss is set at 80 cents. Now, because it's come up a little bit, you want to set your stop loss a minimum of 90 cents. There's not a lot of resistance above it right now, but let's just stick with 80 cents because this might fluctuate by the time the videos come out. Stop loss, my stop loss is set at 80 cents. You set yours where you want to. If this doesn't go the way that I'm thinking it'll go, then I'll let it go. I'm only investing money that I'm willing to lose in this investment. But like I said, there are some people that like these plays. I see that this could move up to $1.20, even as high as $2, and that it's got incredible bullish divergence in the RSI, and it was worth taking a risk on. Let me know if you guys are interested in these type of penny stock plays. The first folks that got the alert were the Discord, and you know where to find that. It's in the top pinned comment. I'm going to leave it there at this point today. I've got some things I'm putting together for you guys. As always, I appreciate you. Hit the like. Thanks for hitting the like. Throw a heart in the comments for me and hit that subscribe to keep getting these types of trade alerts. Peace and blessings, my friends. Take care.